We've already seen IT bellwether TCS report its numbers yesterday. Of course, we've seen a slight slowdown when it comes to the kind of revenue projections and the earnings that have come about on profits as well. We've also seen some of the top global brokerage reports coming after that and giving an underweight rating on TCS after the earnings have been reported. JP Morgan, for example, has given an underweight rating with a target price of 2,700 on TCS, saying that it has missed Q4 numbers across the board, led by the US weakness, and they've now cut revenues by 1% and margins by 20 basis points, driving 2% EPS cut. And also the stock is trading at 24.5 times in 1 year PE forward at a 22% premium to pre-COVID, and the demand is weak with no visibility of turnaround. That's what the concern that JP Morgan has really talked about. Now, Morgan Stanley, however, has given an equal weight rating with a 33.50 rupees kind of a target price on TCS. What they have said is that there are positives like the order book crossing the $10 billion mark as well, and the book to bill ratio has improved as well. They've also mentioned how the LTM attrition is down 120 basis points on a quarter-on-quarter basis as well. I wanted to take your own understanding of what you read through the TCS numbers, and what have you read through as far as the commentary is concerned and the outlook for this company.
Actually, one thing is while analyzing TCS results, one thing we need to keep in mind is the global economy is more resilient than the people thought. So the order book has been robust for TCS. But going ahead, how the things will pan out, it all depends upon the how the U.S. economy and the Federal Reserve moves with respect to the U.S. economy turning into recession, or how long this recession and how deep the recession is going to be. These are the things investors are waiting for. The technology stocks are concerned, especially if this is the medium to short-term overhang on the technology stocks. But for a longer-term investor who is looking forward for the investment horizon of more than 2 to 3 years, definitely they can use the weakness in the bellwether stocks like TCS in this kind of weakness conditions are concerned. One can, in a staggered manner, okay, they can definitely start investing names like TCS at this point of time. They need to use this weakness in the market and overhang on the stocks for a longer term perspective. Not in a, of course, in the medium to short term, the kind of a headwinds the tech stocks going to face because of the uncertainty in the global economy. But the global economy is more resilient than people thought. That's what my understanding
Sure.
with respect to the tech stocks are concerned at this point of time. It can be a contrarian view right now, but for a contrarian view, it will test the patience of the investors, but it will pace in the longer term.
Right. And Infosys is likely to report its numbers today. The predictions here also look bleak. What is your own sense between TCS and Infosys? What would you prefer, and how would you, advise investors to really move forward as far as both these stocks are concerned?
Yes, actually, all the technology stocks, by and large, they're going hand in hand, and we need to look forward for the Infosys results. What kind of guidance they're going to give with respect to again going back to the U.S. economy and the banking and financial segment. The U.S. economy is concerned right now. One thing what we can see is if we keenly observe the segment of verticals of the diversification they're doing is they're moving towards from BFSI to towards they're moving into uh, the artificial intelligence more, and also the pharma and also other healthcare sectors. They're closely getting increasing their order books. So there is a diversification is taking place because there was a worry how the overhang about the banking crisis in US have impact on their earnings and the future order books are order flows are concerned. So
Hmm.
one kind of consolidation is happening with respect to their order books are concerned. But again, just to repeat my comment on technology stocks like TCS as well as Infosys is concerned, for a longer term investors, it is a good opportunity. They can probably start investing in these uh, proven companies for a longer term basis. They can use this weakness in the market for a longer term portfolio building is concerned. Especially Sachi, what we have been witnessing is more number of retail investors have been coming into the markets, and last few quarters they have been venturing into the mid and small cap stocks, which they don't understand. Now there is a softening of the valuation with respect to the bellwether stocks. and the large cap stocks, due to the weakness in this market, they can increase or they can venture into the larger cap stocks in their portfolios going ahead.
If you like the video, do like, comment, share and subscribe.